Jane asks, Kevin, do you still feel Polestar is not a sexy EV play? I'm invested in Tesla and Polestar, and I don't like Lucid or Rivian. Well, I'd love to answer that question for you, and thanks for asking it. Correct. I don't believe that Polestar is a good investment. I don't believe that Polestar has any unique advantage other than solely price. You're not getting any kind of self-driving technology. You're not getting a spectacular supercharger network. So I don't believe you're actually creating any kind of real excitement in terms of benefits for using the vehicle other than the price of the vehicle. Now, I also don't believe you are appealing to the best demographic to appeal to for the transition to electric vehicles, which is dudes between 20 to 45, which is exactly what Tesla does. Because dudes between 20 to 45-ish, 25 to 45-ish, get so excited about technology that they tell everyone in the world that they know about the technology that they have, and they show it off. It's like a long pee-pee for them. They love it, okay? It's like a company with a lot of pricing power. They love companies with a lot of pricing power, which also happens to be what Polestar is not. In fact, let's go look at the last earnings release from Polestar, which I happen to pull up. Let's see what we have. For the 9 months ending September 30th, 2022, we have revenue sitting at 1.47 billion. I believe these are, I don't have the exact currency right here, but I'll find out exactly what this is. But we have 1.47 billion, whatever it is. Here it is. Hold on. All amounts presented in the report are shown in thousands of US dollars. Okay, good. So we have 1.476 US dollars. We have costs of sales, unfortunately, of 1.49. Now, here's an example of a company that literally, in my opinion, has zero pricing power. Not just already for the things that I've mentioned, but consider this. 14.19 on a cost of sales divided into 14.76 provides you a beautiful gross profit margin, my friend, of 3.9%. That is terrible, and explains why not only do they have barely any profit on the top, but they have massive losses once you factor in their operating expenses of about $1.1 billion, leading to an operating loss that is nearly 80% higher than it was last year around this time at just over $1 billion. Now, of course, they have some it looks like finance income here. So we've got some other operations bringing in some income, but on the actual vehicle sales, it's a problem. I have no idea how they pulled off an $890 million finance income and expense net here. That is interesting. That's where I would give them a little bit of hopium if something like that is sustainable, but it's still a company that's burning money. Let's go ahead and see if we can find out, what the heck that finance item is right there, because that seems a little remarkable to me. But then let's also look at their statement of cash flow and figure out what's going on here. Yeah, it looks like finance income was 711 mil. So we've got some large finance income here. We'll see what we can find here on finance income. And then what we'll do is we also want to see a statement of cash flows. Finance income, here we go. Finance income, finance income decrease. These are decreases in finance income. Hold on a second here. This doesn't make quite much sense. Finance income and expense net, $890 million. This is how they padded their net losses substantially. But where that is, I don't understand. Because this doesn't show me under finance income and finance expense. It must be an other item. No, I don't know where that large number is coming from, because they're actually showing that their finance income decreased 93%, finance income decreased by $8.8 million from $9.6 million from the 3 months ended last year. Finance income decreased. This is another period. Finance expenses increased. So finance income decreased. Finance expenses increased. That's what you would expect. What is this? Fair value change. The gain in fair value for earnout liability in September of 2022 was $546 million and $965 respectively. These are primarily attributable to a decrease in Polestar's share price. Okay, so they took some kind of extra income on the fact that their the payout they have to give to probably warrant liabilities is lower than expected because their share price fell. So in a perverted way, they're showing you more income here because their stock price fell. Brilliant. That's no pricing power at all. So that would go, that's why we've got this. Yeah. There it is. See, when we break out the earnout rights right here, this is the only reason they were able to prop up their net income was because of a change of fair value on shares, and they had to spend less money. So their finance income plummeted. No, that's true. Their finance income plummeted 93%, and their finance expenses exploded like 4x because of interest rates. That makes sense. So in other words, the only reason their net income actually looked like it wasn't as bad as it should have been was because their stock price fell. How ironic is that? Oh, our net income wasn't that bad because our stock price plummeted, and now our warrant liability is less. That's ridiculous. Look at their quarterly income over here. Again, revenue, cost of sales, there's virtually no gross profit over here. And this is on the 3-month chart over here. We've got SG&A, which is actually fortunately shrinking, which is good. You've got a shrinking SG&A. That's smart. They're trying to reduce their operating losses, but they're still losing money because they're barely making money on their vehicles. And now let's go ahead and look at their actual cash flow situation. Their cash flow from operating activities in the 9 months ending September 2022 was actually negative $1 billion. That's terrible. And their plant, property, and equipment expenses was actually only 7.4 million. So they're not actually spending a lot of money investing in PPE. I'm not sure if they use contract manufacturing. That could be why. If they're using contract manufacturing, they might not have to invest in their plant, property, and equipment. But if they don't use contract manufacturing and they do it themselves, then why are they not investing in more factories, right? Polestar production at Volvo's. I think they might be contracting production to Volvo, in which case it would make sense that your PPE is not going up here. But that also limits your potential for margin growth because you can't increase margins because you're constantly paying somebody else. So you've got a cash flow here of negative $1 billion. What do you have in terms of a balance sheet over here? Well, on current assets, you're looking at, I'll give them about $1 billion in cash here. We've got no marketable securities. We've got some receivables. We've got inventory. I don't really care about inventory because I consider that as part of cash flow anyway. So I'm going to look at this as $1 billion here of current assets. We've got non-current assets here of goodwill that's worthless. I can't sell goodwill. Plant, property, and equipment, nominal, 255 mil. That doesn't matter. That doesn't help me pay my debts. It's a depreciable asset. $1 billion is what they have. And we've got current liabilities of, oh my Lord, current liabilities of $3 billion. So you've got $3 billion of current liabilities. You've got $1 billion of free cash, and you've got total liabilities of about $3.5 billion. So their long-term liabilities are really just their warrants. They don't have a lot of long-term liabilities, which is good. But the fact that they have $1.1 billion of liabilities to credit institutions due within the next year, and they only have $1 billion of cash, and they're losing $1 billion of cash every 9 months, and they've got trade payables of $817 million, and they have a 3% gross profit margin. This is not a company I would touch with a 10-foot pole. So if you want to ask me why Polestar is not sexy, I'll go through all of it again. But that is my explanation as to why I don't think Polestar is sexy. I'm a fundamentalist at heart. I don't care about what the market does in the short term, but I actually mean it when I say that. That's why I launched an ETF where I place my bets where the fundamentals are juicy. The fundamentals are not juicy at Polestar.